Hello and welcome to myfinanceteacher.org. The second half of May has been kind of sad for stock markets. Actually, all of May has been sort of sad. Stock markets have dropped quite a lot, and a lot of investors are wondering when this sadness is going to go away and when is the sun going to shine again on them. If you are wondering about that as well, stay tuned. This is coming up next. So, first of all, what I want to notice on the chart of the stock markets is we are in the process of going through a failed daily cycle. What does it mean? It means that we have a cycle which is going to create a lower low. The current cycle has started in the middle of May over here on the 14th of May. And currently, the last trading day has actually already given us a lower low. That is an indication of a failed daily cycle. Unfortunately, what it means is that there's still going to be quite a lot of sadness in the stock markets because of a number of reasons. One of those reasons is that these daily cycles usually last for a couple of months, and the current one has only been going on for a couple of weeks. So there is still a lot of duration left within this daily cycle, and given that we're already in the declining phase of this cycle, we are probably going to see much lower prices. What we also see once we zoom out like this a little bit is that since the beginning of May, we've also been in the declining phase of the intermediate cycle, not only the daily cycle. Yesterday, during the last couple of trading days, the S&P 500 has broken down below its 100-day moving average. And since these intermediate cycle lows, we had one over here in December last year, can bring the 14-day RSI relatively deep into oversold territory. Again, this is just another indication that we are potentially going to see much lower levels on S&P 500, given that RSI at the moment is not anywhere close to oversold territory. In fact, in the last trading day, S&P 500 has actually broken below that recent low in the middle of May, but also that has been a relatively important level that has been this resistance and support zone for quite a while since the end of last year. So given that we broke below that level, given that S&P 500 has also broken below 100-day moving average, that actually might lead to quite a lot of towels being thrown in the stock market, and a lot of investors will probably decide to get out of the markets over the next couple of weeks. That again also is an indication of potentially quite lower levels. So next question here is, of course, how low can S&P 500 go? Well, one potential target is this level at about 2600. The reason why it is one of my targets is because this area over here, this zone between 2600 and 2800, has contained S&P 500 within itself for quite a while, for a couple of months at least. And given that now S&P 500 has broken back into that area, there is a chance that it's going to slide down to that support zone at 2600, which worked here at the end of October last year, and very briefly at the beginning of December last year as well. And 2600 is also somewhat of a round number, so that plays some psychological role as well. There's also another reason why I'm looking at 2600 as a potential target for this decline in S&P 500, both within the daily cycle as well as within the intermediate cycle, and that is the Fibonacci numbers. We see that this 2600 is pretty close to 62% retracement, which is at about 2,560 points on S&P 500. So anywhere between 2550 and 2600 is my initial target for this decline. And I would wait at least until S&P 500 reaches the 50% retracement, which is at about 2640, before even thinking about entering some long positions in S&P 500. However, there is of course also a chance that the Fed comes out and talks dovish and maybe even actually does something dovish in order to bring the markets up. But for now, there is not much market expectation of that happening. And for dessert, I want to leave you with a nightmare scenario for S&P 500. But before that, move your mouse to the bottom of this video and hit that like button. Subscribe to the channel as well if you are not subscribed, and hit that bell notification to make sure that you don't miss any of these videos. After all, I really do try to provide you a lot of value in these videos. Why not follow me on Twitter? That's at myfinanceteacher on Twitter, but without the last letter R. There isn't enough space for that last letter R in Twitter handles. Now let's move on to that scary scenario for S&P 500. You know what I'm thinking? The recent 4-year cycle low, which I thought had finished in December last year, might not have actually finished yet. There is a small chance, I'm not sure if that's going to happen, but there is a small chance that S&P 500 is going to break below that December low in the upcoming months and actually give us a true 4-year cycle low. The reason that I think it's possible is because this previous 4-year cycle low between early February 2016 and late December 2018 has actually lasted for 3 years, which is a little bit short for these 4-year cycle lows. So if instead it lasts until say sometime in late summer this year, that would give us over 3.5 years for this 4-year cycle low, which is a little bit closer to its normal duration. And by then, market does expect much more dovishness from the Fed, and that dovishness might actually propel the markets out of that 4-year cycle low. But we'll have to see how it goes, and I don't really, for now, give it much likelihood. And at the moment, it's too early to see if the decline will give us levels lower than we saw in December last year. So this, I think, is a really interesting scenario. Maybe it is a nightmare scenario for some of you if you have large long positions in the stock market, or maybe for some of you that would be a really nice buying opportunity. Let me know what you guys think about this scenario. Specifically, how likely do you think it is? So I'm looking forward to read your comments for this video, and as always, good luck in your trades.